And through periods of greater returns, obviously the risk is lower. It seems lower.
Yes.
But as the market starts to turn, the risk becomes a lot higher. And you spoke before about during the GFC, companies or these hybrids losing 20% of their market value.
Even more in some cases.
Have you seen any of the horror stories where some of these companies have gone bankrupt, where people have lent these monies or borrowed monies that they thought was secure?
Oh, I think there's examples of that all the time. It's not examples that we have a lot of at Perpetual because we're not in that space.
Yeah.
We're in the space of finding quality businesses and lending to quality businesses. So, those type of assets happen in the market, but they're not sort of consistent in stories in our portfolios. But there's plenty of examples of investors that have made direct investments in high yield companies that have got cents in the dollar in recent years. Mackay Sugar is a one that comes to mind.
Yep.
But there are companies that were investment grade companies years ago that don't exist. I mean, Lehman Brothers is a perfect example. I think
That's
it was
right.
an A-rated investment grade
Yep.
investment bank of global reach, and some people lost effectively all their money in that. In senior debt in Lehman's, I think you were getting 75 cents in the dollar. So even though the company bankrupted and equity holders lost everything, hybrid investors lost everything, people who were at the top of the capital structure still recovered, I think, about 80 cents in the dollar.
And there's your risk mitigation, that if you are relying on to keep your money throughout your retirement or things like that, these fixed income exposures, you still get some money back, hopefully, at the end of the day, if you're higher up the risk chain.
Absolutely. It's a trade-off with everything. At the end of the day, there's no free lunch in investing. And I think that's the key guide. What are your expectations of fixed income? And if you come to any investment decision with clarity of what are the attributes I want from this, and I'd encourage investors to think that the role of fixed income is get your money back, have predictability, get an income stream that's sort of cash or better than cash through the cycle. And when you find those attributes, you'll get a return that we think is probably about 2% above cash.